Hello guys, welcome to the Trading Parrot. We've seen today a spike in large deposits together with an increase in profit taking. I want to discuss about that. We look into the order book. We still have that heavy buying wall support, but now we are forming a selling wall on the top. I want to share that with you too. So far, that is completing the head and shoulder pattern in the smaller time frames. So far, we haven't broken anything on the daily or the weekly. Let's go and look into those charts. Guys, if you like this type of content, make sure that you are subscribed to the channel. Hit the notification bell to get notified every time I put out one of these videos. I just finished doing the private weekly TA for elite members of my Patreon community. The video is gonna go live tomorrow for free. If you wanna join those sessions and ask questions live and suggest new coins, you can join my Patreon link in the description. Just make sure that you join as an elite member to be part of that. Next week, we are gonna do Pine Script in the Thursday session. So if you are interested in more technical stuff as well, we do that once a month. And yes guys, today we are having a CBBI reading of 81. It's been a while that we don't cross the 80. That's kind of the ceiling this cycle at 82. We peak at 82 in this peak as well. And now we are at 81. In the previous cycles, we top very close to 100. So the question is if now we're going to get into that level as well for the actual market top, or if for the first time in history we don't reach it. I will say that we're going to get very close. That's my own opinion, no financial advice. This indicator aggregates many other indicators, including on-chain data analysis as well, and I've been following since a couple of cycles ago. You can just Google it or find their Twitter account, cbbi.info, and it's absolutely free. Two massive short positions on Bitcoin just happened to close, and if you wonder if it was me, no, my position is pretty small relative to this. They're trading with $540 million, and the second one is 460, totaling $1 billion in just two short positions. The second one just closed in here. We had three bullish news on Bitcoin. First of all, the inflows on ETFs continue to soar, this time with $779 million, led by BlackRock. Second, we have a UK-listed smarter web company buying 300 Bitcoin, lifting treasury to 1.6k Bitcoin. This is a step in the right direction where we start to see some companies, apart from MicroStrategy, of course, starting to accumulate. Let's hope that they do it on spot and they don't mimic the bad habits of MicroStrategy of accumulating with leverage, which is definitely going to be the biggest pain of the incoming bear market. At some point, you'll know about that. BitLayer's BitVM bridge goes live, unlocking trust minimized BTC DeFi. New bridge lets holders deploy BTC in DeFi for yield, deepening on-chain demand and reducing reliance on custodial wrap tokens. And yes, guys, we need to look at this. There's pros and cons about this news, ups and downs. Of course, starting with the downs, we have $568 million of exchange inflows. That has been a trend already for a while. We've seen the SOPR spiking. Luckily for us, there's also some outflows incoming, and this time is pretty large. $1.4 billion of outflows coming out from Bitfinex. Of course, there is no way of confirming that this is really whales or large holder investors taking out of exchanges coins to start holding from here. I'm inclined to say that that's not the case. You know, sometimes they're just flipping from one wallet to another wallet inside the exchange, and then we read this as an outflow, which is supposed to be bullish. Personally, I think that that's not the case. So today, just this morning, we have 568, and yesterday we have another 528. So that's 4,000 Bitcoin, and then 1.2 billion, 10,000 Bitcoin. It's been a party of deposits, with the exception of those withdrawals. We could say it's been dominated definitely by the deposits. And if we go to the Big Well Explorer, things are cooling down a little bit. We just had 44,000. I think I published that in this video that over the weekend, the whales are dumping hard. And as you can see, that was recorded on Monday. And as of today, we are seeing a withdrawal of 19K. Notice that there's been further additional readings of inflows of 11,002. So if we combine first the 44, then we have 13K, and then we have 11K. So that's a huge amount of inflows into exchanges from large holders. Into the block records the wallets, and that means that this 20,000 that is cooling down the big whale explorer from peaking at levels where we confirmed that we could get a massive distribution, now is coming back down thanks to the 20K, but we have had 44 plus 13 plus 11, so the 20 helps, but not by a lot. I will say that there's still an offset of 50,000 going around there in the exchange that could hit the market. That's the fears, and that's what you should be thinking to keep an eye on. Not necessarily to sell, but just to know that volatility, definitely those whales can splash the market anytime. Now we're getting very close to the first CME gap at 117K, as you can see in here. On Binance, that is 116.8, and we're just dollars away from closing it. We're doing that in the context of a bearish price action. We had already a cap and handle inverted that had a target of 110, but this turned out to be a fake out because we reclaimed the neckline and we formed the right shoulder. It is a little bit malformed. It doesn't look like a perfect head and shoulder, but definitely this is still bearish price action. We'll look into what's the impact on the momentum on the daily, on the 4-hour and weekly, the next levels of support and resistance. I will say it's very likely that we're going to take the first fair value gap, CME gap. The second one will be fantastic because at that point we get to around 113.6, and that triggers halfway the technical target. The final technical target is 110 for the actual pattern that we're seeing in the screen. Still, I keep the 4-hour and daily because we are testing support. We'll see if we break support on the 4-hour. The first one to turn red is going to be this one. If we break the daily support, which we haven't done, then I need to flip daily too. Let's start with the 4-hour. You can see that the immediate support that we have is 46.54. That comes in at a price of 117.4. The resistance is basically reclaiming the green line. The line is with the upwards slope, and we could meet that level maybe at 60.78. Let's increase this. So that resistance at the moment is at 119.760. Breaking beyond that level increases significantly the chances that we destroy the head and shoulders. If we, for example, go to the next fair value gap at 121, then at that point we are forming a bullish structure like this with a target into this area. It's kind of a cap and handle around here if we manage to form it. Of course, we are within the squeeze and we need to decide whether we break below or above support or resistance respectively. Targets, technical ones, are in the screen, the 110 or the 123.2. So price can go up or down. Yes, genius, price can always go up or down. If you haven't paid enough attention to markets, that's what price does. The critical thing that you need to pay attention if you're new and you never taken a trade is the areas where things increase the chances of going in certain direction. In this case, I'm giving you the foot in the mouth so you know what levels need to be respected to decide bias. We don't trade the breakouts. You need to decide within the pattern what is your bias, and you use the breakouts for confirmation to keep the trade open in that direction. If you're still hearing only waka waka, that's fine. You can downgrade and find a channel more suitable to your limitations. Things to keep in mind: we have already broken down once this global support. Notice it's not touching in here the 1st of July. We have to drag the line already one level down. So if we break 46, we are doing it for a second time, and coming from this aggressive move down with a very humble so far reaction up, we could say that this is just a dead cat bounce, at least for now, until proven wrong. If we break the 60 and we put a new high in the momentum, basically taking the 120 and beyond, we can bring back that sweet and sexy 84 RSI on the top of the range, which currently is sitting at 132. Without breaking that 60, staying within the squeeze and breaking down later 46, well, puts on the table the 110s or the mid 115, which is a middle point. On the CPR, incredible how this resistance is still holding as support. 3 days in a row that we cannot break below 117.5. Actually, many days before as well, we've been interacting with that line. So keeping an eye on that support, keeping an eye as well on the daily, how many times we approach this 65.9. In the price action, you can see it very clearly how that level of the RSI has played a crucial role holding the daily from breaking down. Now it's the third day that we attempt that. There is a week down, there is a week up, and price needs to decide direction. If we go back to the 4-hour time frame, it's very evident as well how the previous week high, it's currently rejecting the price from going higher. And if we go into the order book on Bookmap, you're gonna appreciate how these shorts are coming in right there at 120, not letting the price exit from that end. We have 200, 300, 400, 300, 300, 300, and 100. That combined makes over 1.2, 1.3 in terms of resistance, and below the price we still have this 2000.65 holding 114k. Guys, that's the definition of a squeeze. I wonder if we are gonna do a whipsaw against both sides, and I also wonder who the hell has been moving this amount of cash in a single level. Earlier they had 4,000 sitting here, they reduced it to 1,000 and they put it back to 2,000, and for 2 days in a row we have it sitting at those levels. If we were to meet the top of the range on the daily, that's coming in at 85, 138k, just so you know. The weekly is putting so far a candle of indecision, which is something that I'm observing in the market. At the moment we have these forces of Trump doing everything he can to convince people that he is really performing, and the markets along with him. Crypto is doing really great, Nvidia as well. Everything is ready to go to all-time highs forever. We're gonna be super rich, and that the tariffs are not gonna affect anybody. On the other end, we have all the people worried about the tariffs, all the pros, all the hedge funds betting against the market. And primarily, we're seeing that retail is responsible not just for the pumps that we're currently seeing in crypto, but also the ones that are seen in the stock market. It's gonna be a very interesting end of the year. I am bullish for Bitcoin. I think we can take the liquidities at the top end. I'm still monitoring number 2 and number 3, but I'm conscious of the level of risks that there are currently in the market. Let's look at Bitcoin for a moment on the SOPR. SOPR, guys, reflects if it's very high, people are selling in profit. Therefore, that typically marks a top. If they are selling at a loss, then the SOPR is on the low end, and that typically coincides with local lows or lows. Now, in this period in here, it's been coming back down, right? So there was huge amounts of profit taking at the top of 73. There were huge amounts of profit taking at 110. And now we're getting an incremental wave in here of profit taking as we get into 120. You can see that we actually put an all-time high on the oscillator of 118. In this area in here, it was barely 113. Yeah, that coincides with what happened with this move of 80,000 that we have over the weekend that has continued to happen. Now we are at 106, which is definitely more than the average that we have around here, which is just 1. If we focus on this article, it's saying that OG Bitcoin whale moves another 40,000 worth 4.75 billion to new address amid speculation of sells. So everybody's putting attention on this, guys. This is not FUD. That doesn't mean necessarily that they are gonna sell or they are not gonna sell, but if you see 80,000 Bitcoin moving, you don't close your eyes and look somewhere else. And if they continue to move 40,000 again less than a week after, that is also very important. I don't think that is enough to end the bull market or anything, but it's enough to splash around big like a whale. People were asking what's going on with the hash ribbons, and we continue to have the mouth opening here for as long as the moving averages applied to the hash rate in the blockchain are spread away. That means that the hash rate is going down. So we are still in a miner's capitulation. In a miner's capitulation, miners tend to be forced to sell because they are in stress. So that theory in the article that says that despite the fact that people are speculating that the reason or the person behind these moves could be Bitcoin Jesus turned Bitcoin Cash evangelist Roger Ver to the CIA and Satoshi Nakamoto, the most likely scenario is this is an earlier miner from 2011, at least according to the director Conor Grogan of Coinbase. So far all we know is that dangerous amounts of coins are moving. So that's on one side. On the other side, we are starting a breakout in terms of profit taking, which is natural, right? You get it in every single breakout. You start a breakout and you get spikes in the SOPR. That doesn't stop the price from going higher and getting bigger and bigger and bigger and bigger spikes. Eventually, one of those spikes is just enough and it stops the uptrend. You see it in this bubble, and we don't know if this one is going to stop there or if it's going to carry on into potentially number 2 or number 3, but you know that the finger is in the trigger at the moment in case you're feeling itchy with spending all your money and entering in a large long without managing your risk. If you miss the past videos, the volatility model that I have in here is hinting towards a peak at 130. That doesn't mean that that is guaranteed. That just means that if we are to stop with this leg at a level that we have always stopped in the full history of Bitcoin, a straight leg up must stop at 130. If now we go lower and from lower we start approaching that resistance again, that might be a higher price, but for that we need to first go lower if we want to aim for higher. I encourage you to watch that video. I think it's the video from yesterday. Now, long-term holders continue to speed up their distribution. As you can see, now we are crossing the zero line in this particular model. Let's focus on this cycle. So in here, they cross the zero line and the pump carry on. At some point, the distributions of long-term holders peak in strong distribution and the pump slows down and ends. But not always is the wisest thing to wait for the strong distribution. In here, we cross the zero line on this pump from 78 to 112, and just crossing the zero line stop that pump and push the price back below 100K. So don't underestimate crossing the zero line. Is not necessarily the end of the pump, but it is something to note. We've been liquidating shorts primarily for quite a while now. We are at 15.7 in liquidations in the oscillator, indicating that we could be around the corner with liquidations of longs dominating. And the futures open interest percent oscillator finally put a pivot at 20% and came back below the blue line. That is kind of the conservative signal for the actual entry, not entry, I will say signal, the bearish signal that you can use to offload part of your long, take a short, or whatever you please. There is no signal that always plays out, so be mindful of that. Here you can again see the long-term holders curving down in this area in here. So there's been some decent profit taking from them. And if you missed my video yesterday, watch the area with the NVT signal and the AASI as well. Both of them indicating the potential for a small move down on the price, starting with that. Of course, ETFs on Bitcoin and Ethereum are doing fantastic. We are in greed, just 1 point from extreme greed once again, and liquidation in the short term seems like non-existent because we just liquidated a lot of shorts. So if we put this away outside the screen, we can focus on what we have now. And the largest pool is 107. Right here below, there is significant liquidity, very similar to what we just hit at 116. So if we were to do this C wave in here, starting from here, A, B, C, then we could get an extension into 113,357 and take all that liquidity there. If we do so, we're going to have to decide what to do with this 2K that is sitting at 114. That is the buying wall that I referred to in my thumbnail yesterday that is still in the exchange. And it's causing that the bid-ask ratio across all deviations is skewed towards a lot of support. They're very tricky. I don't know if they're putting that level there really with intention of buying the dip, or they're putting it there with intention of screwing up with all the algos that are trading based on the order book positioning. Yeah, algos look into the order book and decide, oh, there is a lot of support here. I'm also gonna pile my long right there. And then when the price comes in, they pull out, they rag pull, and they leave you with the order bleeding. This is how it looks, the liquidation map on the last 30 days. Here we have our 106A, more or less the 107 I just mentioned. And after that, there is two levels that are intense, the 115.7 and the 110. One is the technical target that we discussed, and this one could be a good recipe to do another liquidity hunt. A liquidity hunt is when you get a bearish pattern that has a technical target very far, like 110 from where we are. Everything looks perfect to go in that direction, but you are within an uptrend. So going that far low, it gets bought up and people buy up at areas where there are liquidation levels. So many people might decide, I'm gonna pick 115.7 to enter my next long within the liquidity hunt of that bearish pattern, because if many of us, we enter there with high CBD, the CBD is something that you can read on multiple platforms. In here, for example, is around 3.8. Yesterday it was -14 when it was coming down from the all-time high. Those are aggressive buyers or sellers, green or red. The order book on fire charts is looking like this. You can see that we have now this resistance of 57 million at 125. Below the price, we can still see 114K. Remember that in this particular platform, they focus on Binance only, so we are not seeing the 2K order in this. For that, we need to use Market Monkey Terminal, or we can go straight into Bookmap. On Bookmap, you can see that it's still there. Bookmap is tracking 4 exchanges at the same time. That's how I have it set up. On Market Monkey Terminal, let's zoom in and let's see if we can find that order. I think it's still there, but in here it shows only 1K for some reason. So maybe this is not tracking one of those exchanges. Maybe it's not tracking BitGet, who knows? But on Binance, I have 2.6K, and on Coinbase it's no longer there. That's interesting. I have the feeling I saw it in Coinbase. Anyways. Okay, let's focus on the bid versus ask ratio today. It's all over the place. You can see that the support on 5% deviation of the price peak at this low, and that helped to put the price up. And you can also see that 5 to 10, 1 to 5, and 0 to 1 deviations are all at the top end. That means that we have plenty of orders, limit orders below the price, a lot more than the resistance. So even though we are seeing a lot of activity on the top, if we account for 10%, for 5%, and then for 1% buckets, they're all winning in the support. Of course, that is not the final word for determining direction. If it was that simple, all the algos will always succeed. There is a lot of manipulation in the order book as well. Longs are at 43. They are defending the move down, not extremely aggressively, and shorts are at the moment at a larger risk, showing 139K. At these lows, they were at 300K, so that is fuel to push the price higher, but not by a lot. Something I haven't shown you yet is this different chart. These are not liquidation levels. Don't confuse it with liquidation pools, the usual. This is the location of open interest increasing, okay? So where do we have huge spikes of open interest increasing? Well, precisely from this point here, there was probably a massive order that injected $560 million in open interest. There were some orders in here as well with 500 million around this area. Price tends to chase the areas where open interest increased too much. Of course, I can reduce this and see other levels, but I'm more interested in what is out of the ordinary. So that 111 and 109 definitely is very interesting. We are are here sitting in nowhere's land. We have a fair value gap that ends at 121, which is what I consider the teaser to get us out of this potential head and shoulder. If we go into there, we get a new high and a new higher low as well. That is basically the recipe to get us out of this into a new all-time high. But if instead of that we start carry on in this direction, as soon as we slip slightly into 115, this area is very slippery. It's kind of a tunnel. You enter from here and you exit at 111 in a slap of a finger. Just like we did to the upside, we can do it to the downside. So if you are thinking short, the best option you get is this fat one in here, and then protect your profits and see if we can get anywhere else. If you are in a long, ideally you don't want to let the price get any closer to this because of what I just said. RSI on the weekly so far is been now respecting this cycle top in the momentum on the descending channel within a context of a season of bearish divergences, which respects what we've seen in previous cycles. In the beginning of the week we were breaking out, that's why I'm giving you an update. You can even see how we met with the resistance. We just gave a kiss and we say, maybe I'm not ready for that. Maybe if you serve me another whiskey with cola and you tell me a few nice things, maybe I can give it to you. Which is more or less the same attitude that general markets are currently having, right? We put an all-time high and now we are going 2 weeks in a row just putting candles of indecisions to the side. And that I interpret as a result of the uncertainty that the discussions around tariffs are coming back. On crypto, of course, we have the 3 bills around crypto that are being the thing that are making people trade and speculate with it. But the tariffs is the center of the discussion in general markets at the moment. And that's pretty much why we are seeing the DXY now to get a little bit stronger with the breakout into 40, potentially getting into the area of $100. Gold still being in the area of the rejection of the breakout, and VIX potentially reclaiming support. Of course, that is not something great if we confirm it by Sunday. That could slow down even further the ascension of general markets. Of course, it's intra-candle. We are on Thursday and we still have tomorrow. I don't know, but I have the feeling that recently Fridays are the day where Bitcoin starts pumping and occasionally the stocks as well. We'll see if we close slightly in the negative today. Most likely tomorrow we are going to have a little bit of a move up. And look at this picture, Bitcoin minus 78 and Ethereum and everything else in the green. It's something that we haven't seen a lot in this cycle, so I'm gonna give you the joy of watching this for 5 seconds and let's cross finger, no one breathes. Let's keep this in this way so we can take advantage for a little bit longer. And I'm gonna tell you a little bit of a secret, but I'm taking a little bit of profits here on Ethereum, guys. I just did a bit of TA with my Patreon community 1-hour session, and although I wouldn't short it, I think I'm not gonna regret taking some profits in this area. To be honest, I never regret taking profits. I take the profits and I put them to work on something else. That's the point. Guys, if you wanna trade Bitcoin, Ethereum, or any other altcoins, consider joining the exchange Bluffing. This is a non-KYC exchange, so in a couple of minutes you can get a new account funded and start trading with crypto. Pretty much any deposit gives you some juicy bonuses. This campaign ends in around 6 days, so be quick if you want to take advantage of it. Thanks so much for watching. I'll see you in the next one. Bye bye.